There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
So first thing to talk about if you're new here is talk about what pairs perform better than other pairs. As always, we take a look at the one pair data and take a look at, different pairs over time. And what I collectively like to tell everybody is you should scan all the pairs and really have all of them open, as there's times where even your best performing pairs just don't take trades for long periods of time. For example, you see that the Great British Pound on its own, flipped this account in a year and did 100% by itself. But you'll see that there was a period where it didn't take any trades all the way from April until August 19th. And it didn't make any profit until September 1st again, all the way from there. So even though this is a best performing pair, it has also had large periods and gaps where it didn't take any trades. So this is why on GearBox we do scan so many currency pairs, as we are looking for very specific trade opportunities, and really you got to be scanning them at all times to find those potential opportunities when they do happen within the different currency pairs. Now, now that we have that covered, make sure you are scanning them. That's how you'll be seeing as many trades as possible. We are going into slower times in November and December, but if you look historically at some of these accounts, they did perform as well during those periods. Let me look at the chat here. Yeah, I'm going to just have to make those FX books public at some point, one pair data. Euro CAD is where we all are. Well, at least it's been starting to swing. I closed out some profits on USD CHF this morning. I saw on some of my accounts. I'm also in Euro NZD and NZD CAD. Yeah, a lot of the Canadian pairs, I know people are in those trades, and that's the beauty in GearBox. Sometimes you're waiting for a trade to swing, and when we take a look at, different accounts in the past that have experienced that were higher risk, take a look at this account, for example. At one point, it got in drawdown in February, and it pretty much almost got out of drawdown here February 26th. So a whole month right there. But then it went right back in drawdown. It held this drawdown all the way from pretty much the end of February until clearing it here in July. So it's cool to be able to show people that, because even though it was in drawdown, it was making profits, but some pairs were just in, large swing trades that eventually do play out. Sometimes you might hit a stop loss along the way. You might have a negative month. Things definitely like that can occur. And it's really a patience game when it comes to GearBox. But, even looking at a $250 account that was running one max pair trading. Now, it didn't pay the monthly fee for Auvoria Prime, but GearBox managed to successfully trade $250 and, more than, 200% on this account, which is absolutely incredible. So, you just got to understand how to have patience, use it, and be willing to get a modest gain out of the market. And that's really what it's designed to do, and look for those precise trades. I've been a series CHF JPY sells for a while, but yesterday GearBox opened a buy as well, which seems strange. Yes, that's perfectly okay. GearBox from time to time will hedge That definitely is normal. It's playing both sides of the market. And when you have that happen in swing or sniper mode, those are typically amazing setups because you'll watch the market typically swing and hit both of those, take profits at some point here and get you out of that sequence. So, those are definitely normal things to occur. But with that being said, I mean, does anybody have any specific questions about GearBox that want to get into, how different features work? I want to tailor this call more towards all of you. So, however I can best help and serve, go ahead and let me know, and we'll get right into it. In the meantime, I'm going to talk a little bit about this GearBox calculator. So this is kind of a risk tool and a simulating tool some people like to be able to use to determine their risk. Now, the cool things to understand is it doesn't know every single pair's entry. You're just going to kind of choose your average entry. So an average between entering on about gear level 5, I'd say is normal for people using swing or sniper. Now, you have here 1,000 and here 10,000. These are base rules and risk sizes. Now, this only accounts for one pair at a time. So it's not accounting for how many pairs you're running. So the other things this does not account for is 500 pip stop losses or 25% balance protections, where the software will stop taking any new trades at all. But this shows you simply the next trades it would have taken after how many pips. So you're entering after, say, 209 pips, the first trade. And then this is going to show you drawdown. So for me, I like to look and go, okay, if I entered something after 200 pips and it went another 400 pips with no retracement, one pair, I'm in 10% drawdown. If I'm trading 3 pairs at a single time, that would put me at 30% drawdown. If all of them moved 400 pips against me after entry. And so that's how I kind of look at risk here. And then what's it take to blow an account, right? If you had 3 pairs that all went another 600 pips against you from entry that you were in at the same exact time, that would put you in around 63% drawdown. It's a very high drawdown. It's a highly unlikely move for the most part with the way we have the settings optimized for each pair. But again, we show the risk. Now on a $1,000 account, that risk becomes a little higher. Here on a 10K, with that move, we were in 21% on a $1,000 account on one pair. If you had 3 pairs doing that at the same time, you would have blown that account. We haven't even seen that happen, to anybody really. I haven't seen, no one's shown me a blown GearBox account that was running normal settings, to say the least, in the year we've been running this now with clients on Auvoria Prime. We get to see it. But the point is, that's what it would take. If you had a $1,000 account trading 3 pairs and they all entered and then went another 600 pips against your entry at the same exact time, that could margin call a $1,000 account. So that's why I always tell people less than $1,000, you should decrease your max pairs trading to 2 or 1, because this is kind of what gives you your risk. And I try to put people in scenarios that aren't necessarily possible. What would it take for you to actually have a bad day? Now, again, this also doesn't account for 25% balance protection. That's one of GearBox's saving grace features, where if something does make a quick, rapid move, after you're in 25% drawdown, GearBox says don't take any new trades, manage the current open trades, because with 75% of your equity remaining and no new trades being put in the market, your risk is substantially less than if we continue to take new trades, which allows you to go in what I call chill out mode. And chill out mode's a great spot to be. Not the most enjoyable spot to be, but when it comes to wealth management, money protection, and waiting for a large swing to happen and being able to handle the volatility, that is the key in building wealth. So really, that's what we're doing. We're looking to play the market and do it mathematically. That's really what GearBox is. It looks for the most precise trade opportunities to catch retracements and reversals in the market, and then has the risk management features to be able to deploy and trade and handle volatility and play the different swings that do exist on these currency pairs in the market. That's why we call it GearBox. It's spinning and going and choosing its gears. Let me come back to this here box. For the special gearbox indicators, I'd like to change colors. I don't believe there is a way. I did not build those. Those were given to me by a wonderful person in our community that actually, coded them. So I cannot. I have no way to change those colors for you on those special indicators. But that's how you can manage your risk and really know your risk and understand your risk. And if you're a more conservative person, you could go on a even lower lot size, right? And what's that do for you? Same move that would have had you in 10 before now has you in 7.71% drawdown instead. With 100 moving your end, not bad. Really, we've learned how to manage and play the market, and that's what GearBox does best. And this simulator allows you to really understand your risk and play with it a little bit. So with that being said, let's go ahead and take a look at the week ahead. Monday, we have some AUD, Australia news here, monetary policy meeting minutes, and RBA Governor Lau speaks. Going into Tuesday, we have core retail sales and retail sales on USD. We also have a GBP event with CPI. Wednesday as well, a Canadian CPI. Thursday, no red folders, and Friday, no red folders. It looks like a pretty light news week. Few red folders in the beginning of the week. A lot more orange folder news. We don't typically pay attention to orange folder news, but looking at this, there is a bit more orange folder news than I'd say usual in the second half of the week. So maybe good to pay attention to some of these different things. You see different FOMC members speaking, crude oil inventories, taking a look, retail sales, lots of retail sales, and more FOMC members speaking. Those orange folders definitely stack up later in the week. So typically we don't pay attention to them, but with that many stacked up, good to pay attention to. For those of you who are more hands-on with your strategies and how you trade, I would definitely pay attention to those. But with that being said, thank you all for tuning in here, and I look forward to another amazing week ahead with all of you, and I hope we have some incredible movement in the market. I know I'm waiting on some swing trades to play out, and definitely looking to get into some new trades. So hope we can hope for some volatility, and look forward to the next week. See you on the next one.